The stock market is currently closed as of Monday morning, August 10, 2026, ahead of the opening session bell. Rklb Corporation closed its most recent regular trading session on Friday, August 7, 2026, at exactly $82.83 per share, marking a strong single-day gain of $7.16 or 9.46%, before extended after-hours trading pushed shares higher toward the $83.88 level. While retail traders active on the Robinhood app and across Robinhood stock trading forums are celebrating this sharp upward movement, the underlying fundamental narrative attracting institutional investors extends far beyond a typical quarterly rally. Wall Street is actively reevaluating Rklb Corporation, moving away from treating it as merely a secondary satellite launcher and toward viewing it as an integrated aerospace defense contractor and satellite equipment builder. Most retail investors managing personal accounts on self-investing apps view Rklb Corporation as a high-risk growth ticker sitting in the same speculative basket as volatile equities like Tesla stock or Nvidia stock. However, a closer look at the corporate revenue structure reveals a very different financial profile that alters how serious market participants evaluate this asset. The standard expectation floating around popular investing sites and retail communities is that commercial rocket launches are a low-margin commodity service where one massive private competitor dictates pricing and smaller operators scramble for remainder contracts. That widespread belief leads many retail traders using an individual brokerage account or the SoFi trading platform to trade Rklb Corporation purely as a high-beta momentum stock. The operational reality, however, challenges that assumption. Orbital launches actually make up a shrinking portion of total quarterly revenue, while space systems, payload hardware, solar arrays, and government satellite components generate the bulk of corporate value. Investors monitoring their long-term holdings through the Fidelity mobile app or managing wealth via Fidelity Wealth Management often miss the fact that Rklb Corporation manufactures the core hardware, reaction wheels, and sensors used by competing satellite operators. By securing a presence across every tier of the aerospace manufacturing chain, the company insulates itself against launch schedule delays while establishing a predictable, higher-margin recurring business model. Looking at recent market price action, Rklb Corporation has demonstrated intense volatility across major trading channels, including the Interactive Brokers trading desktop and the Robinhood app. After bouncing off its 52-week low of $37.57 earlier in the market cycle, the stock accelerated upward toward its 52-week high of $151 before consolidating into its current trading range around $82.83. Daily volume in the most recent trading session surged above 24 million shares, easily eclipsing its average daily volume of 18.2 million shares. This noticeable expansion in trading activity indicates heavy institutional accumulation through systems like the Interactive Brokers platform and Fidelity brokerage networks. When institutional volume spikes nearly 30% above normal levels ahead of major corporate earnings announcements, it often reflects smart capital positioning based on long-term backlog growth rather than short-term retail momentum. As Wall Street prepares for the upcoming quarterly financial update, equity research analysts expect revenue to land near $230.9 million, representing a year-over-year top-line expansion of nearly 60%. Individual traders using SoFi Active Investing or tracking SoFi stocks often focus heavily on net profitability figures, which currently show a temporary loss per share as management directs significant capital toward infrastructure development. However, institutional funds utilizing Fidelity investments or managed models through Schwab Intelligent Portfolios pay closer attention to contract wins and total order backlog. Rklb Corporation recently secured substantial government defense contracts, including an $816 million satellite production award and a $266 million suborbital launch contract. Shifting toward major prime defense contracting fundamentally alters the company's financial profile, providing multi-year revenue visibility that sets it apart from purely commercial space ventures. In the broader macroeconomic environment, escalating global defense budgets and expanding national security space mandates are channeling significant capital toward defense technology suppliers. Individual traders using Robinhood Investments, Robinhood Cash Management, or Robinhood Fractional Shares frequently group Rklb Corporation alongside mega-cap technology leaders like Apple stock or artificial intelligence hardware plays like NVIDIA stock. Yet Rklb Corporation functions within a completely distinct industrial category. While consumer tech firms depend on consumer spending cycles and enterprise software budgets, Rklb Corporation benefits directly from government defense allocations and non-discretionary national security programs. For investors using online investing tools or seeking structured investment help, identifying this distinct macroeconomic catalyst is important when building an intelligent portfolio intended to weather broader economic slowdowns. The central growth catalyst closely monitored by traders on the Interactive Brokers platform is the ongoing engineering development of the medium-lift Neutron launch vehicle. For years, industry observers argued that small-lift launch vehicles like the Electron rocket would face a strict revenue cap due to pricing pressure. While Electron has logged over 75 successful orbital missions to become the most active small-lift launch vehicle globally, the long-term upside resides in Neutron. Designed to deliver large satellite constellations, interplanetary missions, and defense payloads, Neutron directly targets the commercial medium-lift space market. Investors utilizing SoFi robo-advisor accounts or holding SoFi ETFs understand that every milestone achieved during engine testing brings Rklb Corporation closer to capturing a meaningful market share in heavy payload launch services. Comment below how many shares of Rklb Corporation you currently hold in your account, or let us know if you are waiting for a pullback before taking a position. Sharing your entry targets and investment strategy gives everyone valuable perspective on retail sentiment across different trading platforms today. To better appreciate the current market positioning of Rklb Corporation, it helps to examine how its corporate foundation was constructed. Founded in 2006 by Peter Beck and headquartered in Long Beach, California, the company initially focused on providing frequent and dedicated access to space for small satellites. Its flagship Electron rocket featured custom Rutherford engines powered by electric pumps rather than traditional gas generators, significantly lowering manufacturing costs and shortening turnaround times between launches. Rather than remaining exclusively a launch provider, management executed a deliberate strategy to build out its space systems division. Through acquisitions of specialized solar power producers, satellite bus developers, and space software companies, Rklb Corporation constructed a complete aerospace ecosystem. Today, whether a commercial or government client requires a custom satellite bus, individual component manufacturing, or launch support, Rklb Corporation handles the entire mission requirement in-house. From a balance sheet perspective, self-investing market participants reviewing options through Fidelity mutual funds, Fidelity ETFs, or Fidelity IRAs must balance growth potential against clear risk factors. Operating in heavy aerospace manufacturing demands substantial capital expenditures, which accounts for the current net loss and negative earnings ratio. Cash burn remains a key metric to track as capital is deployed toward production facilities and testing grounds for the Neutron program. Share dilution risk is another factor to consider whenever high-growth companies utilize equity offerings or debt facilities to fund ongoing research. Additionally, technical delays or test anomalies represent ongoing operational risks that can trigger sharp price corrections, as demonstrated when the stock pulled back from its all-time high above $150 down to the $70 range. Looking ahead over the coming quarters, the ongoing gap between prevailing market expectations and operational execution will likely determine share trajectory. The dominant narrative among casual observers paints Rklb Corporation as a speculative rocket builder exposed to high capital demands and execution delays. The emerging operational reality reveals a vertically integrated defense supplier backed by a growing multi-hundred-million-dollar backlog, scaling component production, and an established launch cadence. If Neutron reaches key operational milestones according to schedule, market valuation models may re-rate the stock closer to established aerospace defense multiples. For investors engaging with Invest Online tools, evaluating interactive brokers' fees, or optimizing allocations through Schwab Intelligent Portfolios, Rklb Corporation